Guys, this is S&P 500 technical analysis for the week of November 14th, 2022. That is from November 14th, Monday to November 18th, Friday. Now guys, at first we are going to discuss the agenda of this S&P 500 technical analysis. So the first point of the agenda is facts from the previous S&P 500 technical analysis. This is where I'm going to tell you that how the S&P 500 moved as per the predictions from the previous weekly technical analysis of the S&P 500. Then the next point of the agenda is very important point. It is the S&P 500 technical analysis on the weekly chart. Weekly chart means the trend. We are going to see the trend, whether the S&P 500 is still in the bear trend or it has changed its trend from bearish to bullish. So this is the weekly chart. Weekly chart means hawk eye view. Now, so next point in our agenda is the CPI, the inflation. So last week we have seen that the CPI it was 7.7. Now everyone might be thinking that okay 7.7, okay, it is good because the CPI, the inflation was 6% down. However, this is not true. This is not the true picture. So technically through the charts I will tell you that how the inflation is doing, how well it is holding, okay, and what are the possible the movements that we can expect in the next month. Then the FOMC, Fed chairman's comment, and the election. So all of these things are related to each other and they are going to impact the stock market, the entire stock market, and this the S&P 500 and the Dow Jones and the Nasdaq and everything, and not just the US stock market but the global stock markets heavily. So that is there in the third point of our agenda. Then I will tell you the S&P 500 support and resistance levels. So if you have subscribed to my channel and if you are watching the weekly technical analysis of the S&P 500, then you know that my support and resistance levels are very sensitive, very critical. Whenever the S&P 500 or the Dow Jones they hit the support and resistance levels, then most likely or most of the times the S&P 500 and the Dow Jones they take a break. There is a hold, and most of the time there comes a reversal. Okay, so these are very important support and resistance levels, and these are not the standard pivot levels that you get through these indicators. Okay, this is something that I've calculated myself. Now the next point in our agenda of S&P 500 technical analysis is that in this the fifth point, I will do the S&P 500 technical analysis on the daily chart. So we will see that how the S&P 500 is doing on the daily chart, whether it is bearish, whether it is neutral, or if it is bullish, and how it is expected to be in the coming week. That is for the week of November 14th, from November 14th Monday to November 18th Friday. And then finally, this is the sixth point of our agenda, and in this the sixth point of our agenda I will tell you the probable movement of the S&P 500 from November 14th Monday to November 18th Friday. So I will tell you that what we can expect, that how the S&P 500 is going to behave or react or move in the coming week. For example, if you see in the picture, then we have 200-day EMA. This is the 200-day EMA and it is very close to the previous closing. This means that yes, we can anticipate a hit at 200-day EMA, and after hitting the 200-day EMA, what is going to happen, whether it is going to fall or whether it is going to move up, okay, and whether there will be some kind of breakout or not. So all of these things we are going to discuss in the probable movement of the S&P 500 from November 14th to November 18th. So guys, this is the agenda of this S&P 500 technical analysis. So guys, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. Now guys, there is one more thing. This technical analysis, it will be lengthy. It will be a bit lengthy. And in order to make the things much more simpler for you, I have made the sections in my S&P 500 technical analysis. So just like this was there in the previous the S&P 500 technical analysis, there are sections. Whichever section you want to watch, you can watch. Whichever section you want to skip, you can skip. Whichever section you want to rewatch, then you can rewatch. However, it is strongly recommended that you should watch the entire technical analysis of the S&P 500, because every section is related to the other section. This means that if I'm talking something, okay, for example, I'm talking about the S&P 500 technical analysis on the weekly chart, then this is also going to cover some of the part of the probable movement, some of the S&P 500 technical analysis on the daily chart, and the FOMC CPI, etc. So all of these sections, they are interrelated, right? And other than that, guys, the information that I'm going to share in this S&P 500 technical analysis, so there are many facts that you might not have heard of, that you might not be aware of. So those, and so these the facts and everything that I'm going to cover here in this the S&P 500 technical analysis, the news, and this the probable, the news, the manipulation, the technicals, the movement, each and everything you are going to get from this S&P 500 technical analysis. So guys, I'm going to begin with the first point of our agenda, and it is the facts from the previous S&P 500 technical analysis. So guys, before I proceed further, I would like to clear this thing that this S&P 500 technical analysis is not a financial advice of any kind in any form or in any manner. Secondly, this S&P 500 technical analysis is not an advice to place your trades in the stock market. This is not a trade setup. Through this S&P 500 technical analysis, I am not recommending any trade setups. Last but not least, whether you are making 100% profits within a day or you are seeing 30% losses within a day, then all of these, the profits and losses, are all yours, because I do not know that how you are going to interpret my S&P 500 technical analysis. Now guys, let's talk about the first point of our agenda, and the first point in this S&P 500 technical analysis for the week of November 14th is the facts from the previous S&P 500 technical analysis. So earlier what we have seen that this was Monday, previous Monday, then Tuesday, okay, it moved up, then it came down just before the CPI data, and then there was a very heavy upward movement. So there was 5.34%, there's the upward movement on Thursday when the CPI data it was out, right? And after this the CPI data, and then there was another, this is the small bull candle. Now guys, if you notice that in my previous S&P 500 technical analysis, I have mentioned this thing that the market manipulators, they have only 3 days, Monday, Tuesday and Wednesday, because on Thursday the CPI data will be out, means the inflation data, it will be out. And once the inflation data is out at 8:30 a.m. Eastern time, US and Canada, and then the market manipulators won't be able to do anything, and no one will be able to do anything. Everyone will have to follow whatever is there based on this the CPI data. If the CPI data is good, in that good means if the CPI data is more than the previous one or the anticipated one, then we will see a fall, a heavy fall, a catastrophic fall. If the CPI data is less than the previous one or less than anticipated, then we will see an upward movement, a heavy upward movement. And so the market manipulators, they have had these the 3 days, Monday, Tuesday and Wednesday. And why the Tuesday? Because Tuesday was when the election, okay, it was there in the picture. So whenever the elections are there, election means speculation. Whenever there is where there are these elections, then okay, it brings speculation, and the speculation, it moves up. When the speculation is heavy, when the speculation is high, then this helps the market manipulators to drive the stock market, this the entire stock market and all of the indices like Dow Jones and the Nasdaq and the S&P 500. And on Wednesday there was a heavy bearish candle in the S&P 500 and also in the Dow Jones and in the Nasdaq. So generally what happens is that the market manipulators, they give you know, a kind of reverse or an adverse, okay, an opposite movement to the market, to the stock market, to the indices a day before, okay, whenever we are expecting, okay, this, whenever we are waiting for an important event to happen, just like the CPI data or the FOMC minutes. So these the market manipulators, the market movers, they give an adverse or an opposite movement to this the stock market, to the indices, to the entire stock market, right? So this was there on this Wednesday, okay, a bearish candle, and then as I mentioned in my previous S&P 500 technical analysis, that if there comes this is the CPI data that is less than the previous one, that was 8.2, and also less than the the data that was anticipated by the Wall Street, that was 7.9. In that case, we will see a heavy upward movement and we will enter into the short term bull trend. However, if it moves up, in that case, we can anticipate that it is going to hit 3907, and 3907 is the 50% of the Fibonacci retracement. And if it breaches the 3907, then we have 3937, the next resistance, then we have 3990. And if you notice that this was in the support and resistance levels, okay, this is the section of the S&P 500 technical analysis. So I told you that we are going to keep the target level, okay, up to the zone of 3990, means 398. So what is the zone of 3990? It is 3980 to 4000. So that is the zone of 3990. So I told you that I'm not expecting the S&P 500 to move beyond the zone of 3990 even with the manipulation, because technically by percentage wise, okay, and through these technical indicators, S&P 500 was not supposed to breach the zone of 3990. So if you notice that on this the Friday, what we can see is that the high of the S&P 500 was 4001. It was 4001.58, right? So if you see that, I told you that the zone of 3990 is where I am anticipating, or I am saying that even with the manipulation, the S&P 500 or the market manipulators will not be able to breach the zone of the 3990, and the zone is from plus minus 10, simple. Okay, if you are subscribed to my channel, then you know that I mentioned this thing, okay, a lot of times, that we use the zones. Support and resistance are the zones, not the absolute levels. Okay, we have the lower band of the zone, then we have the median of the zone, then we have the upper band of the zone. So the only thing that was uncertain in the previous week was the CPI data, that how it is going to react on the CPI data. If the CPI data is bad, then we will be back to the 3675, then 3630, then 3585, and then 3527. If the CPI data is good, and we will be seeing, we'll be seeing that the S&P 500 is moving up. First, it will hit the 3907. Then most likely it will breach the 3907. It will move up to 3937. Then after 3937, it will find 3990, the zone of 3990. That will be considered as the final zone. That's it. Now guys, because there was the movement, okay, up, down, and then this the up. So I was giving the daily analysis, the daily updates to my YouTube community members, and I was helping them to trade in the S&P 500 on the daily basis, from Monday to Friday, that how we are going to trade and what we are going to see or what we are expecting, or that how the S&P 500 is going to move, etc. So each and everything was there to the daily analysis of the daily updates of the S&P 500. So these updates or the daily analysis of the S&P 500 is exclusively for my YouTube community members. So guys, if you also want to get the daily analysis of the S&P 500, the daily updates of the S&P 500, then I've given the link to my YouTube community in the description of the video and also in the comment section. So guys, we have covered our first point of our agenda, that was the facts from the previous S&P 500 technical analysis. This was there in the picture. So we have seen that the S&P 500 moved up heavily, but it was restricted by the zone of 3990. So again, the movement was okay, as we have discussed in the previous S&P 500 technical analysis. Now guys, comes the second point of our agenda, that is the S&P 500 technical analysis on the weekly chart. So let's see what is the trend of the S&P 500, what is the trend of the stock market, and if there is any change in the trend or possible change or anything. So this is the hawk eye view. We are going to look into the big picture. Once again guys, the recession is there. There is no change in the recession part. Now guys, this is the second point. This is the second point of our agenda, and this is the S&P 500 technical analysis on the weekly chart. I repeat, weekly chart. Okay. So when I say weekly chart, that means that this means that one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, right? So let's first interpret the candle itself. This is the last candle. If you notice that this last candle, it is a heavy bullish candle, okay. Other than that, if you notice that this candle has breached some of the technicals, so this indicates that on Monday we can expect either a gap up open, or irrespective of open, we can expect an upward movement, an initial upward movement. I'm not saying that on Monday you are going to see a green candle or a red candle. Okay, I am simply saying that initially we can see a gap up open or an initial movement where it is trying to move up. As simple as that. But because see, there's a technical thing, the zone of 3990. The S&P 500, it was struggling in the zone of 3990. So we need to wait for this the open. We need to see where the open is, and the open will define that where we are going to see this or where the market means the stock market or the S&P 500. Okay, it is means it is heading to. So if the open comes okay above this the zone of 3990, then we can expect it to move up to 4035. The zone of 4035, that is a very strong zone, very strong, sorry, resistance zone. Okay, and also we can see that at 4025 on this the daily chart at 4025 we have the 200-day moving average. So it will be quite easy for the S&P 500 to hit the 4025 and 4035. Other than that, there are some other constraints that I'm going to discuss in the probable movement of the S&P 500, the last section of this the S&P 500 technical analysis. So as of now, we can anticipate a gap up open, or irrespective of open, we can see that it is trying to move up. But again, the closing was in the zone of 3990. So it can create some problems for the S&P 500, right? Now guys, let's talk about the technicals, that how the technicals are doing, okay, or what the technicals are saying on this, the weekly chart of the S&P 500. So first comes the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the median of the Bollinger Band and the upper band of the Bollinger Band, this means that through the Bollinger Bands, the S&P 500 is bullish, right? Then comes these the moving averages. If you look into these the moving averages, there is a clear fan out that is supporting the bear trend, not the bull trend, the bear trend. Moving averages clear fan out the bear trend, right? Other than that, if you see that the closing of the S&P 500 was above all of these the moving averages, this means that because the closing was above the moving averages, okay, it is considered, or it will be considered bullish. This the pattern is saying it is bearish, but the closing is saying it is bullish. This means that overall the moving averages on the weekly chart of the S&P 500 are saying that the S&P 500 through the moving averages is neutral. Then comes the Ichimoku. Because the S&P 500 is still trading below the Ichimoku, this means that the S&P 500 is still bearish through Ichimoku. Now we have seen S&P 500 is neutral through the moving averages. S&P 500 is bullish through the Bollinger Bands. S&P 500 is bearish through the Ichimoku cloud. Now guys, let's talk about some other technicals. So when I say some other technicals, I mean the MACD. MACD is what? MACD is a moving average convergence divergence. Okay. Then we have stochastic RSI, and then we have other these are technical indicators. Now if you notice that this is the MACD, moving average convergence divergence, that is what we this the MACD is. If you notice that the MACD, the K channel is more than the D channel, sorry, not KD, K and D, we have the stochastic RSI. The signal, the MACD is more than the signal. So there is a crossover in the MACD and the signal, and now the MACD is bullish. However, both MACD and the signal both are negative. This means that directionally MACD is bullish, otherwise the MACD is still, means the S&P 500 through the MACD is still bearish. But as of now, directionally it is bullish. This means that it is going to help the S&P 500 on the daily chart, okay, to go into the short-term bull trend for 2 days, 4 days, 7 days, okay, or maybe like 2 weeks, okay. That we are going to discuss in the S&P 500 technical analysis on the weekly chart in that particular section, okay. As of now, both are still negative. MACD and the signal means still it is bearish. Then comes the stochastic RSI. The K channel is more than the D channel. This means that clearly the stochastic RSI, okay, it is bullish. The S&P 500 through the stochastic RSI is bullish. Then comes the divergence. Divergence is normal, not a problem. Volatility, Yes, now the volatility is trading around all-time high levels of the S&P 500. Historically, we have seen that the volatility, it was not okay this much, but now the volatility is almost, or it is, oh yeah, almost like 99% of that the all-time high levels. Okay. So guys, now what we have seen is that, let me sum up, okay, all of this. So what we have seen is that through the Bollinger Bands, S&P 500 on the weekly chart is bullish. Through the moving averages, S&P 500 on the weekly chart is neutral. Through the Ichimoku cloud, the S&P 500 on the weekly chart is bearish. The MACD, when we talk about this, the MACD, so through the MACD, the directionally MACD is bullish, but because the numbers are saying that both numbers are negative, this means the MACD is bearish. So overall, again, we are going to count this the MACD as neutral on this the weekly chart. Then comes the stochastic RSI. Stochastic RSI is bullish on the weekly chart. Okay, and then the volatility, okay, it is around all-time high level. This means that the volatility is going to create some problem for the S&P 500 when it will try to move up. So now guys, what we are going to notice is that on the weekly chart, the S&P 500 is neutral. It is neutral. It is neither bearish nor bullish on the weekly chart. However, these two of the factors, okay, that we simply look into, okay, this is the trend, whether that trend is bearish or the bullish, is first one is the Ichimoku, whether the S&P 500 is above the Ichimoku or below the Ichimoku. If it is below the Ichimoku, this means that the S&P 500 is in the bear trend no matter what. Okay, other than that, the moving averages, if the moving averages are not supporting a clear trend, then again that is not going to help the S&P 500. In that case, we will be going with the Ichimoku only. So as of now, this is the movement from the month of May, okay, until this the month of November. It is still below the Ichimoku cloud and is expected to remain below the Ichimoku cloud in the month of November. Okay, so we are expecting this to remain in the bear trend. When the S&P 500 reaches the Ichimoku cloud on the weekly chart, and when all of the technical support this the upward movement, then only we will see the trend change. Okay, see, again guys, the trend of the S&P 500 or the entire stock market or the Dow Jones or the Nasdaq, so the trend doesn't change every day, every week, or every month. No, the trend changes only, like, after many months or after years. So recently we have seen that the trend was changed after almost 2 years. This was after two. So for 2 years, the S&P 500, it was in the bullish trend. After 2 years, okay, then it came into this the bear trend. Now from May to November, almost 6 months, it is in the bear trend. Okay. So again, the trend will change only and only when the S&P 500, okay, it will cross this the Ichimoku cloud, it will hold above the Ichimoku cloud, it will sustain above the Ichimoku cloud, and all the technicals will say that it is bullish. Then only we will say that the trend is going to change. So the trend, if the trend has to change, then it can change, okay, by the end of December, okay, or in the month of January, provided that the S&P 500, okay, it is moving up and it is holding this, okay, and it is holding bullish. As of now, the trend will change only when the S&P 500 will be above 4,200 on the weekly chart. Means the closings will be above this that 4,200, okay, on this the weekly chart. One is good, two is better. Two consecutive closings, 2 weeks closings of the 2 weekly candle above the 4,200 levels, okay, that will be good, and that will say, okay, yes, now the trend has changed. Okay, but guys, once again we are entering into the recession. So as of now, chances of seeing, okay, a trend reversal going bullish, because see, whenever the trend will change to bullish, in that case the S&P 500 will have to remain in the bullish trend for many months. But because now we are going to enter into the recession very soon, so this means that doesn't look feasible, like going into this the bull trend for many months. Okay, economy is slowing down. Fed chairman has confirmed that the economy is slowing down. Okay, other than that, the Bank of England says that the UK has entered into the long-term recession, and so is the Europe. So this means that the global economies, okay, everything, okay, it has slowed down, and This the slowing down is what? Slowing down is the recession. What is recession? Recess. What is recess? Recess means a break. Okay. So in simple words, okay, in the simple term recess. Recess means break, and that we and we use this the word recession. Okay, means a break in this the upward movement, right? So we are going to enter into the recession, and if you think that this was the bottom, no, this was not the bottom. Okay, as of now, the S&P 500 is in the bear trend. It is moving up just to form a lower high. Once that the lower high is formed, then we will see it is coming back. That it will be coming back. Okay, it might take some time. Okay, it will be coming back, and then it will move into to these other levels around 3000 levels, okay, or even below 3000. So I'm going to discuss these things, okay, in the next sections of the S&P 500 technical analysis. So now guys, we have covered the second point of our the agenda, that is the S&P 500 technical analysis on the weekly chart, and we have seen that still the S&P 500 is in the bear trend. Now guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. Other than that, if you want to join my YouTube community in order to get the daily analysis of the S&P 500, the daily updates, each and everything, and to play safe, then you can join my YouTube community. I have given the link in the description of the video and also in the comment section. Now guys, let's talk about the third point in our agenda, and that is the CPI, that is inflation, FOMC, Fed chairman comment, and the election. So this is very important part. Now guys, we are going to talk about the third point of our agenda, and the third point is the CPI, means the inflation, the FOMC, and the Federal Reserve chairman, and the elections. Okay, so these things are going to heavily affect the movement of the entire stock market and the S&P 500 and the Dow Jones and the Nasdaq, right? So guys, this is the chart of inflation, and the ticker is USIRYY. And if you notice that the recent the inflation was 7.7, and this was for the October. So the inflation is always published in the next month, in the subsequent month. So we are in the month of November. So the inflation for the month of October, that was published in this month. Next month, in the month of December, the inflation that is there for the month of November, it will be published. Okay, so this is how it works. If you see that the inflation recently, it was 7.7, and the previous inflation that was 8.2, and what was anticipated by the Wall Street? The Wall Street was anticipating 7.9. So this 7.7, it was less than 8.2, and it was less than anticipated the 7.9. So inflation, when the number is, inflation when it moves up, then it is bad for the entire stock market, for the global stock markets, and for the economies. But when the inflation it comes down, then it is good for the stock markets, the global stock markets, and the economy. And guys, this was my pre-market update to my YouTube community members. So when the data it was published, so I told them that, see, this is the picture. Because the CPI was 7.7, that was less than the previous one, 8.2, and the Wall Street, that the 7.9. This means that it is going to create bullish sentiments, because the CPI data, it came less than what was anticipated by the Wall Street and the previous number. Okay. Other than that, the CPI data, so there was it was 6% lower than the previous one. Okay, only this the 6% lower than this the previous one, right? And then there was like these are technicals, moving averages, and holding above moving averages. This is something that I'm going to discuss, okay, here in this part. So immediately when the CPI data was out, okay, and this was the picture, so I've informed my YouTube community members, and I told them that now we are moving into the short-term bull trend. Because of this, the CPI is the data that is going to support the bullish trend, right? So now through this, the S&P 500 technical analysis, I'm going to tell you that what exactly, or what is the real picture, what is there and what is not there, right? So if you see in the picture, or if you notice closely, then the CPI data, it was 7.7, right? 7.7. This was just above or just more than the moving averages, just more than the moving average. Okay, so as of now what we can see is that the CPI data, indeed it came down, and it was exactly the same I told you in my previous S&P 500 technical analysis, that see on this Thursday, when the CPI data will be published, most likely the CPI data is going to be around 7.7 or at 7.7. But the real question was that how I knew about that this is most likely, very heavy probability that it will be like 7.7. The reason was the moving average itself. Okay, see, the inflation is bullish, no doubt. The inflation is bullish. The trend in the inflation is bullish. This is the trend, the long-term trend of the inflation. It is bullish. Okay. Now, in this, the long-term trend of the inflation, when it was coming down, then what happens is that, see, this is not just about the inflation. This is all about. So this is about this is the general trading. Okay, means whether it's the stock, whether it is the index. So whenever a stock or the index it moves up, and whenever it sees a reversal, then first it comes down to hit the moving average, and then it finds some good support at this the moving average. That was the reason we knew that, because the moving average earlier it was 7.63 last month. Okay, so I told you that this month it will be around 7.7 or exactly 7.7. This means that most likely we are going to see inflation. If inflation comes down, most likely it will be 7.7 or just a bit above 7.7, but not below 7.7. Okay, this is what we knew very well in advance last week, even before the inflation data it was published, right? So this was seen through the technicals, and this is why we trust the technicals, because technicals are going to tell us that what is going to happen and what is not. So like we have seen that it is 7.7, and it was predicted as 7.7, right? Now in the similar manner, the other technicals are going to work here. And how? Let's first do a quick technical analysis of the inflation. See, inflation, when we look into the inflation, this is the upper band of the Bollinger Band, this is the median of the Bollinger Band, because inflation is still in between the upper band and the median of the Bollinger Band. This means that the inflation is bullish through the Bollinger Bands. Moving averages, clear fan out in the moving averages supporting the bull trend, and the inflation, it is holding just above all of the moving averages. Inflation is bullish through all of the moving averages, right? Then comes the Ichimoku, again inflation is bullish. Then comes some other technical indicators. Now in the other technical indicators, there is a crossover in the MACD and the signal. That is the only significant change that we have seen after March. Yes, after March 2021, means after 1.5 years. This is the only significant change we have seen. But the problem to this change is the stochastic RSI. Because if you look into the stochastic RSI, the K channel is absolute zero. The K channel is now saturated for the inflation. Okay, it is saying that the inflation has touched the absolute bottom as of now. Okay, not for the long term, but as of now, the inflation has hit the bottom. Okay, there is a little more scope, and that little more scope is like just one more month, I guess. The previous one, yes, just one more month. Okay, that will be the only scope. Means in the month of December, if the inflation has to come down, then it can come down in the month of December. But again, either from the December itself or from the January itself, it is going to move up. That is as per the technicals. This is as per the technicals. I repeat, as per the technicals, because the stochastic RSI is now saturated. It is now saturated, and it is saying oversold, okay, or undervalued. And other than that, if you see the divergence, so now the divergence is coming down. Now the divergence is going normal. So earlier the divergence was high, and it was indicating that we can see the inflation can come down, okay, but not heavily. Now the divergence is normal. Now the divergence has come into the range. It is normal. This means that now the inflation has another reason that it can further move up, okay, either by next month or after 1 month. Okay, means in the month of January. Okay, then the volatility, inflation is moving, okay, again this is at the very high or very heavy volatile levels, right? So now guys, what we have seen is that technically all of the technical indicators are saying that the inflation is bullish. Inflation is bullish except the MACD. Except the MACD. Inflation is bullish. Only MACD is saying that it is bearish. However, the MACD, both the MACD and the signal both are positive. This means that still MACD is supporting some bullish sentiments in this the inflation. Otherwise, all of the technical indicators. So this means that 80% it is bullish, 20% it is bearish. Simple. Okay. This also indicates that in the coming month we can again we can see that the inflation is holding just around 7.7. Okay, above this the moving average, because if the inflation comes below this moving average, in that case there will be chances that it is going to hit the next moving average. Means in that case it can come down to 7, approximately 7 or 6.95. Okay, 6 point, this is there 6.9, 6.85, 6.85. So anywhere from anywhere above 6.85. So a reduction from 7.7 to 6.85 will be like 10 or 11%. No. So that will be like, okay, a heavy fall. That is not possible as of now. So again, what we can anticipate is that another 6 to 7%, means 7.9 or 7.10, 7.10, approximately 7.10 in the next month. Technically, okay, that is possible. 7.10, okay, 7.09 or something. So this means that the inflation we are seeing that the inflation is coming down, but in actual it is not. It is not. Okay. So what is happening is that the inflation is in the bull trend, it is coming down and then it is going to move up. This will be the movement of the inflation, right? Now, the question is that why the stock market celebrated, okay, this the decline in the inflation. It was based on the assumption, based on the speculation that because now the inflation has come down, so the Feds will go dovish. Feds will not go hawkish, means Feds will not go harsh. Again, this is just an assumption. This is just a speculation. However, let me tell you that the Feds are not going to change anything. Okay, until and unless they see that the inflation is coming down month on month, at least for 1 quarter. At least for 1 quarter. Okay, means 3 consecutive months. So the Feds needs minimum of 3 consecutive. These are 3 consecutive months where they can see that the inflation is coming down, okay, significantly. However, through the technicals, that is not possible. Why that is not possible? That even if all of the technicals, okay, support that fall, this the stochastic RSI that is now oversold or undervalued and trading at -0.00. It is going to push the inflation up. It is going to push the inflation up, right? See guys, I'm not talking about the commodities, the prices, okay. I mean, there is a lot of data that is taken into the account before they calculate the inflation, but whatever I'm telling you is through the technicals. This happens, this has happened, and this will happen, right? So the inflation as of now, the stochastic RSI is going to give a bullish push, or if not, okay, this is the bullish push, then the stochastic RSI will help the inflation to hold bullish, to hold around these levels, or to hold bullish. This is what the stochastic RSI is going to do here, okay, in this particular picture. Now, what it indicates or what it says, it simply says that as per the recent comments from the Fed chairman and through the FOMC minutes, Fed chairman has said that he is very much uncertain about the inflation. Okay, a few like ups or downs, so that is possible, but he cannot comment, he cannot confirm that the inflation will come down, okay, significantly, or inflation will move up. Means he is uncertain. His tools, his data, his supercomputers, whatever is out there, they are not giving him the clear picture that what is going to happen to this the inflation. But yes, one thing is sure, that the inflation is going to remain on these the critical levels, high levels, and it is expected to move up. Okay, now question is that, see, this is the, okay, the celebration you are seeing in the SP 500. Okay, this kind of celebration, upward movement, and this thing, this celebration is based on the assumption and the speculation. Okay, there is no base as such. There is no base because everyone knows that the Feds are going to take at least 1 quarter, or 3 months into account before they can declare, okay, that now it is coming down. Okay, see, the benchmark rate is 2%. The benchmark inflation rate is 2%, and we are now at 7.7. Okay, approximately 4 times. Earlier it was 8.2. So whatever the market is celebrating, whatever the stock market is celebrating, okay, that is not the true picture, right? For the short term, for 2 days, 4 days, 1 week, that is fine. Okay, it can move up, not a problem. But these are big players. Even the big players, they know that what it is. Now, another thing, okay, that I want to add, okay, here is that now this is November. Okay, November, December, Jan, Feb, March, okay, etc. So we have 4 to 5 months, okay, of winters. These are the months, okay, winter is there. Okay, now this is the winter. There is a war, okay, that is going on in between Russia, okay, and Ukraine. Okay, because of that war there is an impact on the Europe. Okay, the gas. Now Europe is in the recession because the Bank of England has confirmed that the UK is in its longest ever recession. This means that it is saying that the Europe is in the recession. So entire Europe is going into or has already entered into the recession, right? Because the European economy is going to see some crisis. Okay, and you see that Europe, okay, there are many countries in the Europe, okay, many wealthy countries in the Europe. Okay, then the recession is there. Now the problem is as such, okay, okay, in this the recession, okay, in the historically we have seen the recessions, okay, but this time the recession is different because this time the problem comes from the basic level. Basic level is the food and the water, okay, and the basic essential items that we need. Okay, so these are the things, okay, that these all of these the countries, okay, they are struggling with. Okay, so food, there is a scarcity of food. Water, there is a problem of this the water. Okay, somewhere there, so in some countries there are droughts, in some countries there are, excessive floods. Okay, in the countries where there is the excessive flood, these countries are the one who produces the food. So they are seeing the excessive flood means the food is limited. Okay, the countries that are seeing this the drought, okay, these are the countries who used to have this water, okay, a lot of water, because they have many hydroelectric dams that produce electricity. So again, that is again going to create crisis, electricity. Now these European countries are going to fall back on the coal and the natural gas, okay, okay, these things. But now the Russia has cut off this the supply or limited this the supply to the Europe. So there are these problems. Okay, energy crisis, okay, energy crisis means that now the production will be hampered because the factories that are there in the Europe, okay, in the Europe, and not just in the Europe but around the globe. Okay, so every country is seeing some kind of energy crisis. So the factories will not be able to give the required output. When the required output will not be there from the factories, this means that there will be the less production. When there will be less production means people will find, or people will get less of these less products, because people are getting these are less products, and if these products are essential, then definitely the price will increase. Okay, because these products are very essential. If the products are not essential, then the prices will decrease. This means that this is going to hamper the balance sheet of the company, that is, or the factory. Okay, this is the manufacturing, or means everything that are either in the manufacturing or in the supply, means whatever is the domain. So all of these they are going to see, okay, this is the impact on the balance sheet. When the impact on the balance sheet will be there, means lower, means the valuation will be lower. Because the valuation will be lower, this means that the stock price will be lower, because the multiple stock prices, okay, multiple stocks, okay, they will see that they have the lower prices. So will be the index. So will be, because index is what? Index is simply the collection, okay, of these the stocks, multiple stocks based on, and then some weightage is given to the stocks. Okay, and accordingly this the index price is calculated, because now the stocks will come down, the stocks price will come down. Okay, collectively all of these, this means that the index price will come down. Okay, so the summary is that what if you think that the stock market is going to move up and going to hit 5,000, okay, before the end of the year, or like by the mid of the next year, that is as of now that is not possible, not feasible, or simply impossible. Okay, because what they means the market movers, okay, the market manipulators and the news channels, okay, who are driven by these, okay, these are market movers, manipulators. What they are not telling you is this thing that I'm telling you here. This is the technical thing, and also this is the most logical thing. Because if there are food crisis, if you are unable to find food, this means that you are willing to pay, or you will, or that you are willing to pay whatever price is there for the food, right? So earlier let's say earlier you were paying like $2 for a packet of bread. Now if the cost, okay, if it moves up and if the demand increases but the supply is less, in that case you will say, no matter what, even if I have to pay $10 for a packet of bread, no problem, I will pay, but I need the bread, right? That is the picture. Winters are going to create this winters are going to bring more pain to the European economies, all of the countries. Okay, now because Europe will be in the recession, this means that the entire world, all of the economies will enter into the recession, including the US. Okay, so what happened is that when one big country, or when one big economy, or when a region, okay, collectively, when the net worth or the net value of the region is more than many of the countries or all of the countries, in that case the impact, if the region is doing well, then the impact will be seen on everything, okay, on all of these the countries. If the region is in bad shape, like recession, in that case the impact will be seen on all of the countries. Okay, so as of now, the celebration in the stock market is based on the assumption and based on the speculation that Feds are going to hold, okay, or to cut these the rates, or Feds are not going to raise the rates. But that is not the picture, because Feds will take their time, at least 3 consecutive months before they can see that the inflation is coming down. But because we are into this, okay, we have entered into this winters, okay, winter month, this means situation is going to get worse. Okay, not so the situation is not going to get improved. So first the winters, okay, then there will be summers, again the drought, and so things are not, okay, as they used to be pre-COVID, okay, or like okay, this the war between the Russia and the Ukraine. The only thing that can change the picture as of now is the war between the Russia and the Ukraine. So once that war is over, okay, once there comes, some amicable solution, okay, then Russia can resume its supply of, fuel and each and everything, okay, back to the Europe. And see, again, even if that picture is seen like next week, its impact will be seen by next February or March, after 3 or 4 months. Okay, so these things are not instant. So when the Russia, okay, resumes its, this the supply of the oil and the gas, okay, then again the economies will take time to recover, right? So it's a slow process. So guys, this was there. Now comes the election. So guys, now comes the elections. Okay, so elections, the picture will be clear in the month of December. Okay, by the month of December the picture will be clear that who is going to hold what. Okay, this the House, okay, the Congress, okay, this the Senate, okay, who is going to hold the, okay, this the lower house, okay, and the Senate. So as of now, by the time the elections are there, okay, the speculation will be there. And because the speculation will be there, okay, but now the speculation, it will be not that high as it was on Tuesday, right? So it will be there, and the chances of seeing the manipulation, okay, they will also be there. So see the summary of this thing, okay, this whatever I've told you, okay, this a lot of things. The summary is that whatever you are seeing in the stock market, whatever these people, the market movers, are saying or are trying to convey their message, that see, now everything is well, okay, now everything is good, it is well, inflation is coming down, and we are going to recover, and we will see some better, times and all. No, They want you to go bullish. They want everyone to go bullish, because when everyone goes bullish, when there comes like billions of dollars, hundreds of billions of dollars in the market, in the stock market, then they will be taking the advantage, because as of now they are going to push it up. Okay, they are going to make money. One day they will dump it all. They will enter into these the short positions. Okay, you are going to lose. It will be you who is going to lose. So momentarily you can see that you have seen 2% profit, 5% profit, 10% profit. Okay, but in the bigger picture, it is them who are going to win, because first they move it up, they will then book their profits here, then they will bring it down, and then again. So the recession is there. Recession, you cannot, or we cannot simply, cover our eyes and say, okay, that the recession is not there, everything is well, everything is good. The even the results of the companies, recent results, okay, these are quarterly results of the companies, have said that the big ones, the giants have posted the bad earnings. What? Bad earnings. When the giants, trillion-dollar companies are posting bad earnings, okay, and means overall maximum number of the companies have posted bad earnings, then how can we say that within a month the picture will change? No. This is the economy, this is the stock market. Things don't change. Trend doesn't change within a month or within a week. Okay, these things, they are time consuming. Even if the situation has to change from bearish to bullish, it will take 2 to 3 months minimum. Okay, minimum, then only the things will change, right? So as of now, assumption speculation is there. Again, we are going to wait for the next FOMC. Okay, this is the Fed comment. When the Fed say, okay, or most likely the Feds are going to stick with the plan. Fed chairman is not going to help the market manipulators. Okay, as of now, this was seen from his previous comments. This means that in his next statement, in his next press conference, okay, if he sticks to his words, if he sticks to his words as was there in his the recent this the press conference, this means that the stock market is not going to move any further. It will come down. So the short term trend, it will be over by that day itself. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community in order to get the daily updates, the daily analysis of the S&P 500, then I've given the link in the description of the video and also in the comment section. So guys, now we have covered the third point of our agenda, and that was CPI, the inflation, FOMC, Fed chairman, and the election. Now guys, we are going to move to the next agenda, the next point in our agenda, and that is the S&P 500 support and resistance levels. So now I'm going to tell you that the movement, okay, possible movement, okay, what will be the numbers or what will be the zones, okay, where we can expect, okay, this is the movement, the constraint, okay, to be constrained, and the support, and these are resistance levels, right? So let's move on to this, the fourth point of our agenda, S&P 500 support and resistance levels. So guys, before I give you the support and resistance levels, I have this information to share with you that if you want to get the daily analysis of the S&P 500, these are the daily updates of the S&P 500, and if you want to play safe in the stock market, in the S&P 500, in the Dow Jones or in the Nasdaq, then you can join my YouTube community. And in order to join my YouTube community, I have given the link in the description of the video and also in the comment section. So when you click on that link, then it will bring you to the page, and this is my YouTube channel page. Now on this YouTube channel page, there is the join button, JOIN, join button. So when you click on the join button, then you will see that there is the pop-up. Now in this pop-up, there are the two options, only one midweek update and all midweek updates. So what is the midweek update? The midweek update means the daily analysis of the S&P 500. The daily updates of the S&P 500, so that is the midweek update. So the meaning of only one midweek update, only one midweek update means that you will get the daily analysis of the S&P 500 only on Monday, every Monday, only on Monday. And if you opt for all midweek updates, this means that you will get the daily analysis of the S&P 500, the daily updates of the S&P 500 from Monday to Friday, each and everything. From Monday to Friday, pre-market update, first update, second update, third update, fourth update, then final update, everything, and you can play safe. And if you notice that most of my members, 98% of my members, they have joined or they have opted for all midweek updates. These are all midweek updates. Means they are getting the updates, the S&P 500 updates, the S&P 500 analysis from Monday to Friday, each and everything from Monday to Friday. So guys, once again, the link is in the description of the video and also in the comment section. Whenever you want to join, you are welcome. And guys, once you have joined, then please visit the YouTube community, the community tab, and you will find all of the updates in the community tab of my YouTube channel. Now guys, comes the fourth point of our agenda, and the fourth point is the support and resistance levels for the S&P 500. Now in this, the support and resistance levels, okay, first of all, we need to understand that any movement, as of now, any movement, it is expected to be restricted to the zone of 4110. Now the question is that why 4110? Okay, so the reason is that earlier we have seen that there was a confluence zone, a very heavy, not one but two, and that was the reason there was a failure. Okay, so this was the lower high and then it came down. This is where I told my YouTube community members that okay, this is the point where we are going to see a reversal in the movement, and now it is expected to come down, and it came down very heavily. Okay, so when everyone was losing money, my community members, they were making money, right? Anyways, so as of now we have 4110. Other than that, okay, we have one more reason that why it cannot, because there comes a trend line. So these are the two reasons. However, I'm going to cover these two factors in the last part of this, the S&P 500 technical analysis, that is the probable movement of the S&P 500 from Monday, okay, that is 14th of November, to Friday, that is 18th of November. Now okay, so we have 4110 in the upside. Then the next, okay, this is the resistance, intermediate resistance, we have 4067 or 4065. Immediate resistance we have is 4035. This 4035, okay, it has proven, or it was a very good resistance historically also. 4035, again 4035, it's a very strong zone, very strong resistance zone, okay, just like the 4110. So we are going to see that if the S&P 500, if it moves up, then it is going to hold around the zone of 4035, okay, before further moving up or before coming down. Now the immediate support that we have, okay, see, other than that we have a resistance because of this, the 200-day EMA, this is the orange color, or this the yellow color, okay, this is the moving average you are seeing. This is the 200-day moving average. So it is at 4025. It is at 4025. So it is also going to act as resistance. Okay, 4025 just before the 4035. Immediate support we have 3990, in the zone of 3990. That is the immediate support. Then we have 3937 support. Then very good support. Okay, then we have 390. That was 3937. Okay, then we have 3907. This is the 50% of the Fibonacci retracement level. Okay, 3907 or 3908 approximately. Then we have 3884, good support. 3841, extremely good support, very strong support. 3840. This means that if the S&P 500 comes down, then it is going to find very good support in the zone of 3840, right? Means it is going to hold. It is going to hold. Then comes the 3790, again a very good support. Then 3735, 3736, then 3675, again a very good support at 3675. Then we have 3630, okay, and then we have 3600 and 3585 and so on. Okay, so guys, these are the support and resistance levels. So in this the upside, okay, 4110, 4110, or the zone of 4110, just a little bit up down, that's normal, not a problem. Okay, on this the downside, okay, in this the downward trend, okay, we have 3840 first, 3840. Then we have 3735, very good support. Then we have 3675, and then we have 3585. Okay, so 4110 to 3630, you can say. Okay, in the coming week, that will be the range. Okay, most probable range, okay, for this the movement of S&P 500. But this one 3840, 4110 and 3840, okay, that is most likely, okay, this the movement of the S&P 500 will be confined between these two levels, because the moving averages are also there and the confluence zone is also there. So this means that 3840 to 4110, okay. So this particular range, and that is how much that weighs, that will be 7%, 7%, yes, approximately 6.92% to 7%. So you can see the movement up down, okay, in these the ranges. So guys, these are the support and resistance levels. Now let's move on to the next part, and that is the S&P 500 technical analysis on the daily chart. So now we are going to see that how the S&P 500 is going to behave, or it is behaving technically on the daily chart from Monday to Friday. So guys, this is the fifth point of our agenda, is the SP500 technical analysis for the week of November 14th, that is from November 14th Monday to November 18th Friday. So let's see what the technicals are saying on this, the daily chart of the SP500. So the technically, okay, if you notice, so first comes the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500, because the SP500 is trading above the upper band and above the median of the Bollinger Band, this means that the SP500 is bullish through the Bollinger Bands. Then comes the moving averages. There is a clear fan out in the moving averages, and the closing of the S&P 500 is above all of the moving averages. This means that the SP500 is bullish through the moving averages. Then comes the Ichimoku cloud. Because the closing of the SP500 is above the Ichimoku cloud, this means that the SP500 is bullish through the Ichimoku cloud. Then comes some other technical indicators. Now if you notice that the MACD is more than the signal and both are positive, this means that the SP500 is bullish through the MACD. Then comes the stochastic RSI. Because the K channel is more than the D channel and both K and D are above 50, this means that the SP500 is bullish through the stochastic RSI. Then comes the divergence indicator. Divergence, as of now it is normal, but it is moving up. But as of now it is normal. It is not going to create any problem for the S&P 500. This means that even if the S&P 500 moves up for like 1 or 2 days, then also the divergence will remain normal. The volatility. So the volatility, it moved up and again it is trading around these the all-time high levels. Okay. So what we have seen is that through all of the technical indicators, Bollinger Bands, Ichimoku, MACD, moving averages, divergence, stochastic RSI, that through all of the technical indicators, the SP500 is bullish on the daily chart. And that is where I told my community members, YouTube community members, on this day in the pre-market update, that see, we are going to see a gap up open, that is certain, we know that. And now we are going to enter into this the short-term bull trend, means we are going to see that the SP500 is going to move up to a minimum of, or at least to the zone of 4035. This means that now it is going, this means that now the movement will be, okay, this the upward movement. So this is where, okay, when you are bullish, you are going to make money, right? So a reversal, a bearish reversal will come. Okay, first we need to see whether it is holding, okay, in this the zone of 4035 or not. If it is holding, then it can further move up. But again the maximum, okay, that we have is the 4110. Okay. So guys, we have seen that technically SP500, okay, through this the SP500 technical analysis, it is bullish. It is bullish, right? Now guys, let's talk about the last point of our agenda, and that is the probable movement of the SP500 from November 14th, that is Monday, to November 18th, that is Friday. So we are going to see that how the S&P 500 is going to behave, or how it is going to move from Monday to Friday in the coming week, that is the week of this November 14th. So guys, now comes the last point of our agenda of this S&P 500 technical analysis, and this the last point of our agenda is the probable movement of the S&P 500 in the coming week. So guys, once again, if you have not subscribed to the channel, then please subscribe to the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily updates, the daily analysis of the S&P 500, And if you want to play safe, then I've given the link in the description of the video and also in the comment section, so you can take a look. So guys, now in this the probable movement of the SP500, what we know is that there are bullish sentiments because of the assumption, because of the speculation that because the inflation, okay, it was down, okay, it came down by 6%. This means that the Feds are not going to harsh, or Feds will not go harsh, or Feds will go dovish, okay, in the coming months or in the month of December. And also there was an assumption that now because the inflation is coming down, okay, everything is going to be or everything is going to work well, okay, everything will come back to the normal. And this is what I've told you, that no, nothing is going to come back to its normal. And the same thing was discussed in the I think that was the third point of our agenda, okay, the FOMC and the inflation. Okay, I've clearly told you that what is the real picture, the true picture, right? So what we know is that as of now, yes, there is quite a good possibility that the S&P 500, okay, if there comes a gap up open, or irrespective of open, see, no, first, if there comes a gap up open that is above the zone of 3990, above the zone of 3990, then it can push the market, means put the stock market, the S&P 500 and the Dow Jones and the Nasdaq up. In case of the S&P 500, this upward movement will be there up to 4025, that is a 200-day moving average. Other than that, we have then immediately we have the zone of 4035. So this is the zone of 4035, okay, it will then move up to 4035. Now this is the point where it is going to hold. It is not expected, particularly on Monday, it is not expected to move beyond or much higher or much above the 4035. Just a bit up down, that's fine. That will be in the zone of 4035, like 4045, 4050. That's fine, not a problem. Okay, that will be the expected, the maximum point, okay, or this is the maximum level for the S&P 500, okay, on Monday if it moves up. Now, if there comes a gap down open, in this case the gap down open, okay, again it can try to move up, but in this case first it has to struggle, okay, here in this the zone of 3990. Once it breaches the zone of 3990, then only it is allowed to move up to 4025 or the zone of 4035. Simple. Now so let's say, okay, now let's say that it is going to move up. So when it moves up, okay, again it can take a break in this the zone of 4035. Then let's say there's the, okay, this is the break, it comes on either on Monday intraday or on Tuesday, okay, so or on Tuesday, so there will be some break, and then again when it resumes its this the bull trend, then again the maximum level it can achieve is the 4110, the zone of 4110 or the level 4110. Why? The reason is that earlier the S&P 500, it was in the consolidation, okay, in this level, and this the 4110, it was the lowest, this is the lower band of the consolidation zone, right? This means that in the coming week we are not expecting the S&P 500 to move beyond or above 4160, approximately, yeah, 4160, 4150, okay, because this is the zone. This is what, this is the zone, and not just any zone but a confluence zone where there was a lot of activity, okay, lot of activity means hundreds of billions of dollars were there, okay, in this the zone. This means that no matter what, okay, the S&P 500 in general, the S&P 500 cannot breach the zone of, or it cannot move beyond 4110 heavily, or in the zone of 4110 to 4160, okay. The only case, the only scenario that where the S&P 500 can breach the 4110, the zone is the 4110, okay, this is the lower band of the zone 4110 or a maximum 4160, will be if there comes an exceptional news, particularly from the Feds. If the Feds say, okay, that yes, the inflation is down and we are going, dovish and we will not go harsh on the market, this is like 99% chances that this is not going to happen, right? Feds are not going to, so feds cannot manipulate the market, right? Simple, because they are there to take care of the economy. They are not there to manipulate the market, and they generally, okay, they don't do this thing. Okay, this is done by the market manipulators. So that is the only case. So as of now, when the S&P 500, when it moves up, then the upward movement will be restricted to 4110, and other than that, we have this that trend line. So the trend line will again be restricting the movement, any upward movement, to 4110, 4110. Okay, upward movement, it is going to be restricted in the coming week. Now there is a chance that we can see, okay, a bullish breakout, but for that first it has to move up, and then the open and the close must be above this the trend line. So see, if that the bullish breakout comes, and if you are my YouTube community member, okay, then I will tell you in advance that we can expect a bullish breakout today. Okay, and this is how, okay, you can prepare yourself. So guys, once again, if you are my YouTube community member, then you need not to follow, okay, these are the market manipulators, the market movers, okay, these are the news channels, because they are not going to tell you this the picture. Okay, so I'm giving you this the daily update, the daily analysis from Monday to Friday pre-market. Okay, I tell you what is going to happen in this the entire day, and generally, okay, that happens in this the entire day. S&P 500, it moves like that. Okay, and otherwise, okay, I give you the first, second, and the third updates, and then I give you the final update for the next day. So you are very well aware of each and everything in advance. Okay, so you need not to fall in the traps of these the market manipulators, right? Anyways, for my subscribers, okay, you can stick to this the weekly technical analysis. Okay, and if you have any question, then you can ask your question through the comments. Okay, now so there comes yeah, so this is the upward movement. So the upward movement will be restricted, and then it will be coming down. Whenever it comes down, it will find support on the boundary of the Ichimoku, and which is, okay, and this is the point where the 3907 it comes into the picture. Now guys, there is one more important thing, one more, very very important thing, and this is the 61.8% of the Fibonacci retracement level, right? So we have 50% Fibonacci at 3907 or 3908. We have 61.8% at 400 5, I guess 5 or 6. Okay, that is the 61.8% of the Fibonacci retracement level. And what is the 61.8% level? This is the golden ratio. Okay, we call it as the golden resistance, golden ratio, okay, or the golden support. It depends on the movement of the S&P 500 or the entire stock market. This means that when the S&P 500 moves up, and when it hits the 4005, 4006 approximately, see, it can even breach this level, not a problem. But a closing above this, the level of 61.8%, means it can move up. A closing below means that now it is given that either it is going to give up or it has given up. Okay, and it is going to retrace. So on Monday, when it moves up, then we have the zone of 3990, and just above the zone of 3990 we have 4005. This means that in order to move up, the S&P 500, either it must give a gap up open that is above 4005 or 4006, or it should, or if it try to move up, then it should move up very very heavily, so that it should be able to breach this the 4005 or 4006, that is the 61.8% of the Fibonacci resistance level, right? So you should also consider that. So we have 4005, we have 4025, that is a 200-day moving average. Then we have 4035, that is our calculated resistance level. Then we have 4110, again the confluence zone and our calculated resistance levels and the trend line. These three factors, that 4110, right? Now, any downward movement will find support at this the boundary of the Ichimoku, okay, or this was 3990, and if not 3990, then 3937. 3937, okay, this is where the S&P 500 is going to find some good support. Now guys, now comes this the second movement. So the second movement is, let's say if there comes this the gap down open, okay, or even with the gap up open, but the gap up open is below 4005, and with this kind of movement, this kind of open, it tried to move up, okay, but it failed because of the 61.8% or because of the 4025, and it comes down, then again it is going to hold, okay, on this the boundary of the Ichimoku. Then we have 3937, then we have the 50% of the Fibonacci retracement level, then we have 3884, and then we have 3840. As of now, whenever the S&P 500 comes down, it is going to hold here, and then we can see, okay, a reversal, means a bullish reversal. In the upside we have 4110, and then it can come down like this. And guys, other than these, okay, there is no big news coming in the next week. So we have some, PPI, the producer price index, and other, these the manufacturing index. Okay, these are numbers, okay, that will be out there, the business inventories. Okay, so that is the news that can impact the movement of the entire stock market, the S&P 500 and the Dow Jones and the Nasdaq, but it cannot change the trend, or it cannot give a heavy movement to this market, the stock market as such, or the S&P 500, right? So now we know that when it moves up, this is going to happen. When it comes down, then this is going to happen. And when it comes down, then what level is going to provide it, okay, a very, very good support. When it moves up, then what level is going to act as a very strong resistance, okay? Or if see, because there was a very heavy upward movement in just like, in just 2 days, so what we can see is that there is the third possibility that the S&P 500 can try to consolidate for like 2 to 3 days or 3 to 4 days around these levels. That will be the consolidation. Right? So that is the third point. But again, guys, if you are my YouTube community member, okay, then we will wait for Monday, and based on this the movement of Monday, I will tell you whether the S&P 500 is going into the consolidation or not. Okay, and accordingly we know that what to do when the S&P 500 or any stock or any index or any index is moving into the consolidation. Then what to do? So guys, once again, if you want to join my YouTube community, then I have given the link in the description of the video and also in the comment section. So you can take a look, and you can join my YouTube community in order to play safe and to get the daily updates and the daily analysis of the S&P 500. So guys, again, if you have not subscribed to the channel, please subscribe the channel and hit like if you have liked this video. So guys, this was my S&P 500 technical analysis for the week of November 14th, 2022. That is from November 14th, Monday, to November 18th, Friday.